Hey everyone, welcome back to Corporate Decoder. Today, CNB Financial Corporation, PAR, just filed a current report about a dividend declaration, and I am seeing a key detail about shareholder returns. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is paying out a dividend, and we'll look at what that means for investors in their common stock. So CNB Financial Corporation, which trades under the ticker CCNE, has announced a quarterly dividend. This is pretty standard for a company like this, especially one that is in the financial services sector. It tells us they are generating enough cash to return some of it to their shareholders. The company is based in Pennsylvania and is incorporated there. It is a regional bank, and this kind of dividend announcement is a normal part of their business cycle. They've got their common stock, which is what most people think of when they talk about owning a piece of a company, and they also have preferred stock, which is a bit different. For their common stock, the board of directors has declared a cash dividend. This means that if you own shares of CCNE on a specific date, you will receive a payment. The amount is $0.19 per share. This dividend is set to be paid out on the 15th of September 2026 to shareholders who are recorded as owning the stock by the 1st of September 2026. Now, they also have series of preferred stock, which is a bit more complex. For this type of stock, they've also set dividend payment dates. It is important to note the distinction between common and preferred stock, as they have different rights and payout structures. This filing is an 8K report, which is used by companies to announce major events that shareholders should know about. In this case, the major event is the dividend declaration. It is like the company officially telling the world, we're giving money back to our owners. The company's common stock is traded on the Nasdaq Stock Market LLC under the ticker symbol CCNE. This is where most investors buy and sell shares. They also have depositary shares for their preferred stock, which trade under CCNEP. This usually means a smaller piece of the preferred stock is available for trading. The main takeaway here is that CNB Financial Corporation is rewarding its common shareholders with a regular dividend. A dividend of $0.19 per share might not sound like a lot on its own, but when you own many shares, it adds up. For instance, if you owned 100 shares, that would be an extra $19 in your pocket. This action signals financial stability and a commitment to returning value to investors. It is a positive sign that the company is performing well enough to share its profits. The filing also mentions that a press release announcing this dividend is attached. Think of this as the official announcement, often with a bit more detail and context. It is like the company putting out a formal statement to the press and the public. Looking at the broader picture, CNB Financial Corporation is a regional bank. Companies like this often rely on stable income from lending and other financial services. Paying dividends consistently can attract income, focused investors, which can help keep the stock price stable. It is a way to say, we're a solid business and we're here to stay. The report is signed by Tito L. Lima, who is the treasurer. This tells us that the financial information and declarations are official and have been reviewed by the company's finance department. It's the final stamp of approval. In terms of analysis, this filing is straightforward. It is not a deep dive into complex financials or a warning about potential trouble. It is a routine announcement about a dividend payment. For investors, it means that CNB Financial Corporation is continuing its practice of returning capital to shareholders, which is generally viewed positively. It reinforces the idea that the company is on solid ground and expects to continue generating profits. There are no major red flags here, just a clear signal of ongoing financial health and a commitment to shareholder value. The risk I am watching is how interest rate changes might affect their lending income in the future, but this dividend itself is a positive sign. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this deep dive helpful, please like, comment, and subscribe. Join our Discord community for more insights, link in description.